Welcome to the Traders Help Desk Online Video Collection. In this video, I'm going to show you the new THD Zones indicator that we are developing. And as you can see, the yellow lines here are your zones. So we had a zone right here at 3010. We also had a magenta peak, pulls back to the ATR, which actually happens to coincide with the zone. Does so on the verging volume. So this gives us an entry into a short position. And I would say that it's probably going to come back and try to retest this low. Now, using the clipper, we can simply place the clipper on the bar that we entered. And offsetting this above the slow moving average, you have a risk of 9 ticks. And what I would do is watch the volume, especially when it gets to these yellow zones, to see what happens. Now I'm going to pause the screen while we're waiting on this, and then I'll resume once the yellow lines or the first profit target have been touched. The one thing I am watching right now is the volume as we're making new lows. I do want it to be increasing volume, which right now it is. We also see that the RSI is going flat. That also tells us that there's potential momentum to the downside coming back in. Really need to see some more volume coming in here now. Okay, we have Clipper 1. Our stop in now will be at break even plus the cost of the trade, which would be 3075. So I'm going to make this line magenta so you'll know that that would be your stop. The second thing you really want to pay attention to is if it does come to this red line, you need to see the volume on that. Now typically if we're going to get a Wyckoff spring here, it's going to go at least to 2983, which will take this out by one tick. And it will be on diverging volume. So just something that I know to pay attention to. We had that yesterday on the NASDAQ as the market closed, and it bounced up 10 points from the Wyckoff spring on a 3-minute chart. So our volume is still increasing. We have not exceeded this low yet. So it's real important that you know not to watch the volume on this low until it has at least equaled the low or exceeded it. Now, there's one other issue here, and that is the 45-minute chart. And this is where the 45 comes in handy. You can see you just had volume divergence here. Very important to note that you're at 80 on the 45-minute. So you could even tighten your stop more, knowing that. And the reason that that is important, this is typically where we would get a magenta peak over in the 45-minute. It's also because of the divergence, an area where we would expect a test for the buyers. And the test for the buyers will occur on the 45-minute chart. It does look like the zones are offering some resistance for price. And let's see if it can go back to the red line. Any type of divergence right now on the 3-minute will bring me out of this trade with the 45-minute at 80. As it stands right now, you're getting divergence on that bar. And this bar will end in 2 minutes, so I'm watching it very carefully. Right now, I would go ahead and pull my stop down to $29.99, just in case it pops back up suddenly. We have about another minute left in that bar, I think. Okay, we did not have diverging volume, but I have lowered my stop. Okay, it's closed above the zone, so I'm going to go ahead and exit my position. The zones did not provide resistance for price. The 45-minute is at 80, and we have had divergence. So to me, that's significant, and I would go ahead and take my profits to lock them in.